Can we start with what happened yesterday at around 2:30 p.m. Eastern time, around the oil close? We saw a massive amount of selling pressure in the futures market. Was there anything in your mind that could have driven that kind of a move to the downside?
Well, it seems prices were struggling all day to sort of hold on to the gains in the aftermath of the OPEC meeting, this 52.50 level, but couldn't really do it. And then the Iranian oil minister was on the wires talking about a lot of infighting within OPEC, sort of calling into question the commitments they just made about cutting back on production and trying to stabilize the market. So that seemed to be sort of a 1-2 punch there, technical in these comments.
So is that what the oil market has become now? Moving in that kind of way just on some of these headlines that come out and because of technical trading related factors?
There's no doubt. I mean, I know in your program this morning you've been talking a lot about ranges in various of the markets. Right now, the oil market has settled into a little bit of a mini range for right now in the aftermath of all this selling, between about $50, which is a historic sort of level, both going up and coming back down over the years, and about 54. So, you know, we're watching to see if we can get more retracement to the upside, but we're going to need to take out that 54 level with some conviction. The test right now for this market is, does Saudi Arabia and Russia in particular deliver in a big way on the output cuts they announced last week?
So we've heard so much. We've talked a little bit about the force majeure happening in Libya because of one of the largest oil field out there being seized by militia and some armed members of the citizenry there. It's been a possible driver of the market. But does it still come down to just ROPEC or OPEC Plus or whatever you want to call it and the production cuts and whether they can actually stabilize the markets?
Yes and no. Yes and no. I mean, there's obviously a big challenge from the U.S. shale production, which has skyrocketed, right? But as I'm trying to sort this out, I'm looking back over the past year, you had these fragile situations in production with Libya, with Nigeria, and of course Venezuela is pretty much looking like it may go to zero. That generated a compliance with the OPEC regime from November 2016 of upwards of 160, 180%. That achieved drawdowns of global inventories. That's what got the price up towards $70 just back as recently as October. So if they're back at it, if they're going to commit to that in a big way, Dom, then the price should stabilize and head back up at least for a time.
U.S. shale, you brought it up. It's a big part of the equation right now. The U.S. is the biggest producer in the world for oil. Is oil at 50 to 54 still okay for the U.S. oil industry?
I'd say it's just okay, but it's okay. It'll be enough for them to get through. The problem they're all facing, though, is there another price break looming for 2019? And that looks, to me, rather likely in terms of slowing economic activity and the push oil volumes higher and higher here in the U.S.